It's time for smart money moves. Credit is an important part of our financial lives. Can you have too many credit cards and too much debt? What is a credit score and why is it important? That's coming up right now on Smart Money Moves. Hi, I'm Marcia Griffin, and I am happy to welcome you to Smart Money Moves, building wealth for everyday people. Credit is the ability to borrow money to buy things you want. Most of us use credit to purchase things like homes and cars. However, few of us are taught about responsible credit use, credit scores, and how they impact our lives. A lot of spending on credit cards can cause emotional and financial headaches. Here to offer insights on how credit really works are Jacqueline Reed, President and CEO of Oasis of Hope, and Katie Doyd, a credit counselor at the Safeguard Group. I'd like to welcome you both to Smart Money Moves.
Thank you for having me.
It's a pleasure. And look, before we get started, dealing with credit and debt is a big issue for many families. Let's break this down as much as possible, simplify it so everybody understands. And Jackie, I'm going to start with you. What role does credit play, whether good or bad, in our everyday lives?
Hello, Marcia. Thank you for inviting me this morning. We are so happy to be here. And just to talk about credit, it is so important. It plays a very important role in everyday life. Does take an effect on us if sometimes we overdo it on credit and sometimes we just don't know what to do. We got to look at a budget. First of all, that's the first thing that we always do, look at a budget and to determine what your budget, how your budget can be reorganized so that you can start to save and make payments on those credit cards.
Absolutely. Well, Jackie, we all know when your credit cards get maxed out, it does cause a lot of trauma in one's life. And without question, it's good that there are organizations like yours and many others that will help people settle us down so that we can get control. Katie, we often think of credit only as it regards credit cards. What other types of credit are there?
Oh, lots of credit. House, a mortgage, a car
Yeah,
loan, student loan. You can have other secured debts on your credit report. All of those things play factors into your full, complete credit score. All of those items can have different weights on the credit report and affect the score. And then, as far as scoring models, there's multiple scoring models for a FICO score. So all of those can play into a factor.
well, what is a credit score? Tell us about that because every lender certainly looks at credit scores. What is a credit score and why are credit scores so important?
Sure, a credit score is important because it is managing risk. It is letting a lender or creditor know if you are at risk of default in the next 24 months or 2 years. And so they are going to lend you money based on the score because everyone has a story. Everyone
Okay.
has their own financial path. And we needed to create something that could help the lenders make a educated decision on if you would be a reliable borrower. And so that's why the FICO score and then more recently the Advantage score were created.
Absolutely. Well, just to have everyone be aware, there are three scores. People are looking generally at the middle score. Jackie, tell me two things that we need to do to improve our credit scores, if you would? I know the credit scores go from about 350 to 850, but if we're at 500 and we need to get that credit score higher, tell me two things that we should do to improve our credit scores.
Well, Marcia, the first thing that we always tell our clients is to pay your bills on time. Is to, if you just have to pay just the minimum portion of it, and until you get your budget straight where you can make the payments that you want to make, we tell
Yeah.
you to pay the minimum payment each
Mm-hmm.
month. Don't ever miss paying the minimum payment. And then another thing that we tell people to is to try to keep your your scores, to keep your scores in a good credit range, is to keep it down below 30%
Yeah.
of the maximum amount of charges that you can have. If you're at 50% of your maximum charges, then your credit score is going to decrease. So we try to
Yeah.
tell people to get it down below 30%. So if you're paying that minimum payment and you're keeping your payments, your amount of payments down to about 30%, then your credit scores, you're going to see it gently rise. It's going to continue to rise. So that's the two things that I can offer, that
Mm-hmm.
we
Mm-hmm.
uh, that we offer to our clients.
So, look, let me just sort of explain this a little bit. And thank you so much, Jackie. So, if your credit limit, if the top credit limit is $1,000, what Jackie is saying is that to maintain a good credit score, do not go past $300. So your top balance is 1,000. Don't go past $300. The minute you get up to $500 or you start maxing out that credit card, you're getting up to the 1,000. Your credit score goes down, 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 down. That's a very, very important piece, Jackie. And also, really, I love the fact. Look, everyone can't pay every bill in total every month. So if you don't do anything else, put your bills on debit from your checking account so that they are paid every single month. And if you have to just pay the minimum, just pay something on every single credit card every month. So, Katie, let me get back to you. What is the best credit score that one needs in order to buy a house?
Every lender will tell you something different on that.
Yeah.
Every lender has specific requirements, but I like to see people somewhere for the best terms, somewhere in the mid 700s is where I like to see people reach, simply because the lower the interest rate, the less money we pay, right? So getting our score nice and high, it might be worthwhile to spend some more time increasing your score over a year and getting a better interest rate, as opposed to qualifying right now just because you want to rush into it and move forward, and
Yeah.
then paying higher interest for the length of the mortgage, which could be 30 years of interest. So really getting it into the mid 700 range is where I'd like to see it.
Katie,
Mhm.
what should you do if you don't have a credit score? How do you get one?
Sure. So this could happen to anyone at any stage in life. You could be, a student in college with no history. You could be someone where maybe you had a spouse and they've paid everything for the longest time and you never really needed it, but now you realize you might want to build it. So, one of the easiest things to do is to obtain a secured credit card. A secured credit card is a prepaid credit card
Good.
where you pay money forward and then you use it like a credit card. It will be reflected on your credit report. For anything to have an impact on your credit score and be on your credit report, it has to be open for at least 6 months. And then we would see the trade line on your credit report reflecting in the score. So I would definitely
Excellent
work
point.
towards that. Yep.
So can one just go into their bank and ask if they offer secured credit cards, or do you go to a special place?
Yes, you some banks offer it, and I often will suggest to people that they go there, go to the places that already have a relationship with you. So
Good.
if you've had an account with them for a long time, they know that you're reliable. They have the experience. So go there first, but always get another opinion. Always look
Mhm.
and research some other options because there might be something that maybe has no fee and this card might charge you $5 a month and it might be worth it to some people to shop around.
Absolutely, absolutely. Jackie, allow me to get back to you. So, what are your thoughts about um, repairing one's credit and also credit repair companies? Do credit repair companies really, really help?
Well, I always say credit repair companies. It's totally up to the individuals, but
Yeah,
I don't particularly refer people to credit repair companies only because it's something that they can do themselves. And what we do is we help them. We help them to write letters to dispute. First thing, pulling your credit report annually, at least once a year, and you get that free.
yeah,
Um, so when you pull your credit report, you determine what's on your credit, and you see if there are charges on there that may not belong to you. You can dispute them and say, okay, that needs to come off. We ask them to dispute most items on the credit report. If they belong to you, dispute them. And
hmm,
we can do the same things that credit repair agencies can do. So I tell them, if it could be $1,500 that a credit repair agency charge you. Take
yeah,
that $1,500, pay it, make a settlement with the credit card company that's on your credit report. And it may be
absolutely.
50 cents on a dollar to remove that. If they decide to remove it, get a letter from them and state that it's paid, it's settled, and they will report that on your credit report that is settled if you ask them, so that it's settled in full. And when you start to disputing items, they drop off. Once
Yeah,
they drop off, then the credit starts to build again. And as Katie mentioned earlier, that you mentioned for Katie, um, use the credit, uh, an authorized user, become an authorized user on another person's credit, like your parents or something, and then
hmm,
you will see your credit score start to increase every single month. We've had a person that has come to us, and she started off with a 580 credit score. We started disputing everything. She looked up, her credit score was at 680.
oh,
Then she
good.
came back to us and she started continue to dispute and continue to pay the little bills off that were in collections, and she realized she had a 711 credit score at the end of probably about 6 months to a year. This takes a little while, but once you get started and you see that improvement, it becomes easier and easier.
Katie, tell us about a person that you've helped. Maybe you have a story too.
Sure. Well, in regards to a settlement company, I did have a client come in, had a 550 credit score, was going through a divorce at the time, and
Yeah,
wanted to buy a house. And so the first thing I did with him is we looked at his budget. And he had a good size income, but his score was 550. So then when we went into the details of the credit score, I did notice that he had signed up for a settlement company. Now, this is a big thing. He did not realize it was a settlement company. Oftentimes, the settlement companies that are paying or you're paying a lot of fees for will
hmm,
use different types of names without the word settlement in it. And settlement is where you basically agree to pay back less than owed, and it's a negative impact on your score. So if you're going
Mhm.
to purchase a home or want to purchase a home in the near future, settlement is not something I would suggest. It would be much better for your score to pay it back.
Mhm.
If you owe it, you can make a plan to pay it back over settling, because settling,
Mhm.
one of the requirements is that the loan or the amount is in default, and we don't want things in default on your report because it will be there for
Mhm.
quite some time.
Mhm.
Instead, you can work with your creditors and lenders and maybe negotiate something with them on your own and get a lower interest rate to help you pay it back faster. And in turn, you're actually making more money for yourself for the future, because your higher score means less money out of your pocket. You're less of a risk. So we want to
Yes.
eliminate as much risk as possible.
A question always comes up about bankruptcy. So, Jackie, talk to us just for a minute, if you will, just about bankruptcies. There are two types of bankruptcies, I believe.
Mhm.
And if one has just gotten way beyond their bounds in credit and debt, and many things happen from medical and divorce and everything else, which type of bankruptcy is best? Not that either one are best, but if one has to deal with bankruptcy, then we will. Which one is best, and how long does a bankruptcy stay on your credit report?
Well, first of all, a bankruptcy can stay on your credit report up to 10 years. Well, I would say 10 years now. It used to be
Okay.
7 years, and now they've increased it to 10 years.
Hmm.
So once you get into a chapter 7, you have a chapter 7 and you have a chapter 13. So chapter 7 is where everything is discharged, and you don't have to pay it back.
Yeah.
And if you have a mortgage, they don't have to include the mortgage in there. If you have, sometimes they will allow you to keep one or two credit cards open, but on a chapter 13, it's where you pay a portion of it back.
I
And
see.
there is a trustee that you pay that to, and that trustee will then pay all of your bills for you each month that you make that payment to them. So when the chapter 7 is discharged, it takes about 3 years that a
Uh-huh.
lender would be able to look at you and say, okay, this is discharged, and it's recorded in the bank, on your record, on your credit report. It is considered a judgment, so
Yeah.
it is recorded on your credit report,
Right.
and it states that it's discharged. Once it's been 3 years, the bank will then start to look at you. Some banks, some lenders will take 3 years. Some may say 4 years, but it depends on the lender's products and services that they have.
Okay.
So, when we take those folks to a lender and say, okay, they're ready to ready to purchase a home at this time, then that discharge on the credit report means absolutely nothing at that point. You don't get charged a higher interest rate for it. You are now considered, all of those are forgiven. But you need to
Uh-huh.
start utilizing credit in the correct way now, which means that open up a charge card is fine. They still want to see trade lines that you have, that you've started, that you begin to pay back on time,
Yes.
um, at least 12 months. And then you are fine. So we have a lot of people that come in that the bankruptcy has been discharged, and they are fine to go with
Mhm.
becoming a homeowner again.
Okay, great. Let me jump back over to you, Katie, if I could. Two questions. Number one, very quickly, in the past, people felt that only very rich people filed bankruptcy and it was just a shameful thing to do. Are you running into many people who are filing bankruptcy? I mean, for honestly, for legitimate reasons.
We get people from all walks of life, all walks of life. Life can throw you a curveball at any point, and that's why it's there. It's there if you need it.
Jackie, very quickly, we're almost at an end. Who should pull their credit report? Should an average everyday person pull their credit report, or they need to go to an organization like yours?
Actually, Marcia, it's good for an average person to pull their own credit report to check it
Yes.
at least every 6 months because you can get that report free. So it's best that you check to see if there was a mistake or something, or somebody may be using your credit, and it's very hard to get your credit straight after
Yeah.
you've been after fraud has been on your credit report. So I suggest that everybody on the that's walking the earth should pull their credit to check it.
Everybody walking the earth. That's a good point, because also there are a lot of errors on the credit reports. And as you just said, Jackie, it's hard to correct these things. People use your credit report. I mean, they use your social security number without you knowing it. There are a lot of errors, and these errors generally will take your credit score down. They're not going to take your credit score up. Well, look, we're coming to an end. There's a lot to discuss. There's a lot that we've learned here. So I'm going to go to you, Katie, and then Jackie. Katie, what smart money moves would you like our viewers to remember?
The first, and if you remember nothing else, I would like everyone, you may know your credit report, you may be pulling your credit report, but are you reading the details of every debt that you have?
Okay.
People often come to us and say, "Oh, I know how much I owe. I know I owe this to this creditor and this over here for my car loan." But I would ask, "Well, what's the interest rate?" "Well, I don't know what the interest rate is."
Yeah.
And knowing your interest rates, knowing all those details of everything is so important. Right now, because of how everyone receives statements, often it's just sent to your email, or you might still receive paper statements, or you might just only have online access to the account. Download the full statement, get all the details. You can pay back debt in a mindful way that's going to save you much more money. You can always look into the avalanche method or the snowball method. Those are two ways to pay down debt, and it's worthwhile. It can save you thousands. So always look at that.
Wonderful. You know, your point about interest rates, so important. We want everyone to know that the higher the interest rate, essentially, the more you pay. So, to Katie's point, looking at that interest rate on every single bill that you have is really, really critical. And we're going to put more information on our Smart Money Moves website there at here at WHUT. Jackie, what smart money moves would you like our viewers to remember?
Well, one thing that I like for them to take heed to is to remember that you can't think life happens. Life will happen to us all. And if you have to start over, do so. But as Katie mentioned, write down all your debts owed, making sure that you look at every creditor that you have. But you don't when you're starting over, remember that paying something on that credit card. If you
Yes.
have credit cards, remember to make just the minimum payment. You're not going to be able to pay it off every single month. You're not going to be able to pay that maximum payment that you want to pay, but never miss a payment on those credit cards. Always pay the minimum payment. at least in order to keep your credit going?
Well, look, we could talk about this all day long, credit and debt. And I just want to thank both of you for our excellent discussion today on credit, and to you, our audience, for joining us. It is a pleasure to have all of you. For more information on Smart Money Moves, go to WHUT.org. See you next time on Smart Money Moves. And remember, together we can and will make a difference.
This program was produced by WHUT and made possible by contributions from viewers like you. For more information on this program or any other program, please visit our website at WHUT.org. Thank you.